Shadim Shari. Big week. Big week. How hard to rank the importance of this week, but this could be the biggest week year to date because it's the first time that the Fed is going to cut rate. It's something that uh, I have been waiting for. It's like watching paint dry. Um, no doubt, I was way wrong last year, thinking that we could have a recession last year. Way wrong. But this year, watching the economic data deteriorate slowly, painfully over the past 9 months has been a slow moving train wreck when it comes to the economy. So today is a big day. It is a big day indeed, as far as, well, not this today, this week, Wednesday, right? So I think whatever the market is doing, my game plan for this week is going into Wednesday. If there is a big pop in the market, doesn't matter if it's 1%, 2% up, whatever that is. I don't think it will be because I think the market will be very cautious. I think the same people will be the one being very careful. That chasing into this market, pumping it up 2 or 3% higher is dangerous. But if there is, I'd be more than happy to exit a whole lot of equity if that's the case, especially when it comes to small cap. Okay, I have a lot of exposure, a lot of exposure to small cap that I would be happy to exit on any pop. But before I go on and talk about the stocks tickers in the title of the thing, I want to bring everyone's attention to the dollar, DXY. Okay, DXY. We depend on what platform you use. It either dollar DXY or DXY. Before Thinkorswim was bought out by Schwab, it was DXY, and since they got bought out, I had to change the ticker to dollar DXY. But it is the dollar versus a basket of currency, including the yen, the Canadian dollar, the euro, the British pound. And what do you see here? The dollar is flirting for the past 3 weeks with year-to-date low. We have not been this low since the end of last year and this year. Now, why is this is just a refresher for the people that don't watch my video often or have a short memory or no memory. Short or no memory, or have never heard me talk about the dollar. Let's go back 3 years. Okay? All right. Let's go back even 5 years. For 3 years. It's weird when we get to a point now where 3 years does not go back far enough because of the pandemic. The pandemic low make everything look weird if you go 3 years. Okay, so it is safer to go 5 years. All right. Here's 5 years. Okay, first of all, you got the pandemic low, and then you got really weak dollar. No doubt we are more impact to the rest of the world with the lockdown. And coming out of the lockdown, we were ripping. The dollar was ripping coming out of the lockdown, right? Ripping higher. But to be fair, here is where it is right now. Okay, so this is where we are. And we have been here quite a few times in the last 2 years. But if you go back 3 years, there was a time where we ripped way higher. We were strong dollar right here For those that remember, there was about a year worth of company complaining on every earning. Oh, currency fluctuation, the strong dollar hurt earnings. Of course, because when you have a lot of business overseas, sales earning, it impact the earning because of the strong dollar, right? So every company for a while, for about a year, in every earning call, for those that remember that far back, had to mention that, because of the strong dollar, the sales was lower because currency translation, and then earning was low because of the impact of the strong dollar. So, and that was gone. That was gone very quickly. And how did that happen? We recover quicker than the rest of the world, and then we came back into balance with the rest of the world. Okay, that's how quickly, literally in 6 months. This 6 month span here, right here. Well, this 1 year span. Okay, this 1 year span. We whatever gain the channel that you see, yeah. So now let's get back to this year. For a while, I'm sure if you pay attention, weakness in Europe. There has been weakness in Europe. If you don't know, the euro has cut rate. Canada has cut rate twice. Okay, so, and forget about China. We all know how bad China has been, right? So what happened in the last 3 months? No doubt our economic data has shown a lot of weakness, to a point where the Fed hint potential of cutting rate, and last month came out with pivoting to it's time to cut rate, right? So because the currency move along with the economy, okay? So what you have now is the dollar fall to a point where it is in balance. Okay, to me, this level right here is where it is balanced with the rest of the world. If the rest of the world, China, Europe, are in a recession, and they are not denying that they are in a recession, because they have cut rate and continue to cut rate, and we are joining the party of cutting rate. Okay, the only thing left from our lips that are different from their lips is the word recession. We are using all the other word that we have that is not recession: soft landing, no landing, whatever. So that's why the dollar is where it is now. The reason why I opened this video talking about the dollar is because of the Fed gonna cut rate. If the Fed cut rate by 50 bips, it's gonna freak out the equity market. Because if the Fed cut rate, right now the odds maker are putting 50-50 on 25 bips or 50 bips. It is that close of a race. Even closer than the presidency election. So if the Fed cut rate by 50 bips, I think the equity market will signal panic. The equity market will signal that the Fed is conceding that we are in a recession, because it is rare. It's more common for the Fed to start out slow and then speed up. In 2008, that's what they did. The last recession, whenever they start cutting rate, they didn't come out with a gun blazing 50 bips, but they start to go 50 bips or bigger very quickly after that. So, and if we are in a recession, if the Fed cut rate by 50 bips, and the market interpret that move as the Fed conceding that we are in a recession, and if we are in a recession, notice how I line things up. If we are in a recession, there had never been in the history of mankind that a recession equal a strong bull market. Okay, a start of a recession, a conceding that there is a recession, usually come with a 30% to 60% market meltdown. That's all I'm saying. I'm not saying that it's not happening overnight. Okay, go back to 2007, 2008, and 2009. That painful 55% decline, or whatever it was, to be exact, 56%, rounding up, span over like a year. It was brutal. All right, it was a brutal decline. So keep that in mind. Nothing is a straight line down. Okay, nothing. We're not gonna have like a crash of 55% kind of thing. No, it might be down 2%, up 1%, down 5%. It's just gonna just go back. For those that want to take a look at the history, go back to take a look at the QQQ or the SPY in 2008 and see for yourself how the market marched down 50% over that year span. Okay, so it can happen again. All right, let's take a look at some volatile small cap biotech. I'm back. Right now, I am back about almost half of what I had before this big move. Okay, now remember, this is a triangle that have a breakout. Let me talk about this, okay? When you have a breakout, this gray line here is the measure move, all right? It does not mean that, oh, it's out. Perhaps that was the reason why people pump it up for a couple of days after it broke out of the triangle, right? But that's the measure move. The measure move, it does not mean that it's gonna achieve. Okay, the measure move show you potentially where it can go if there is enough momentum. It might not happen. It might take 3 months to get there. It might take 6 months to get there. It might take 1 week to get there. It's crazy, but that's how it goes. At the end of the day, you follow the TA and do the right thing, right? No doubt we did. We trim into the 200. We start trimming up here in the 29. At least I did. I can't speak for other people. And then into the 200, into ref high, okay? There was all kind of technical point here to follow. Okay, look, this breakout move, beautiful, beautiful. You got the 200, and then you get the fib and ref high right here. Okay, all kind of point to exit right here, and that's what we did. And then it came back, and it's a perfect example. Remember, I talk about usually when you see something like this, it's a cautious, okay? Because when you have sharp declining of volume, it is hard to trust the move. Does not mean that it's not. Let's go back here. Okay, when you have this big crash, and then you have declining volume, that's not a bad thing. Okay, because you want to see selling abated, and then it's up. It's the opposite of this. Okay, so flip to the opposite side when you had the big move up on declining volume. Then, well, guess what? Is it a surprise that it came down? But look, volume has returned. So there are buyers. There are buyers coming in. That's what we did. That's what I did. Okay, I put in my buys order up here, down here, and of course at the gap fill. Okay, so there is a potential check back all the way to the trend line. Nothing wrong. I sold put as well. I sold naked puts 25 at 25, two of them. So I'm willing to take in 200 shares should we come down to 25 and below. But before that, would I buy more share between here and down there? Absolutely. Now, pre-market look like it's a pop on a lot of these stocks. So I'm fine. But I got back, I think half of what I liquidated up here already. So yeah, I'm already building in the position. You got to trade fast with these, okay? No doubt about that. Next up, Rocket. Oops, can type. I was accumulating heavily at the channel low. It was painful, but hey, if you don't buy channel low, where else? I'm a big fan of channel. I talk about it all the time. And there is potentially a breakout here. Okay, so let's zoom in. Look at this. There was plenty of time to buy Rocket below 19. Plenty. Okay, if this is the right read, if I have a right read here, as far as I literally doubled my holding over the past 6 weeks. Yeah, crazy. And volume looked decent, but the real big move is here, in my opinion. You basically the 50 MA, okay? Between there's a lot of reference high like this at 20 where it rejected, and then it get close to that. So that have been definitely a little profit taking in that area, like near 20. Okay, so it's not a surprise. But to me, the escape velocity is likely up there at the 50. If we can get, because look, the last time it completely broke down was the 50. When it broke the 50, it had been hello channel low. So that 50 is going to be a key spot. Okay, so it's already over the 20. I don't care. Okay, I don't care, because when it comes down to using moving average, sure, every one of them matters, but it is more important. Some MA, moving average, some MA are more important than other. Depend on the stock. Okay, when you talk about max 7, no doubt the 20, when a stock is in a bull run, okay, the 20 MA is key. When a stock is in a bear pattern, the 200 is important. For Rocket, for now, the 50 is important. Okay, no doubt the 20 is always something to pay attention to, but just because it break the 20 here, it's nice that it's holding. That's fine. But look at the 50. Look at what the 50 did when it break the 50 and hold. All right, what a move. And then it tests the 50, it tests the 50, it tests the 50, and it broke the 50. And ever since then, it has been swoosh down. And trying to break the 50, broke the 50, go all the way to channel high, and then give up the 50. So yeah, it's the 50. Okay, when it comes down to Rocket, it's all about the 50. So for now, we watch. If you break the 50, it could be a powerful move to channel high. And I think it's coming. Rocket does have a catalyst that between now and the end of September, there will be a FDA decision on their drug. What caused this meltdown was the pushback on approving the drug because of production deficiency. They had to prove that they can produce the drug. It's a complicated process. Okay, so that's the thing. So they got themselves basically 60 days from the day of the delay of approval, and it's coming up in the next 2 weeks, I think. So there will be a big catalyst, and if there is a catalyst, oh baby, okay. I'm looking at ref high, channel high, ref high, 26-ish. It would be a nice move from 19 or 20 to 26. That's a 30% move. Gambler, come on in. Okay, Vikings. Vikings have shown strength right here. Now, if you pay attention, Viking broke out of a triangle pattern. Okay, it was coiling. Look, it was coiling up, down, up, down, out. Remember, go back to the very first stock ticker, BBIO. What happened when it broke out of the triangle? Can it run? Possibly. Will it retrace? Possibly. Okay, so nothing is for certain. Okay, so this is the 3-year chart. So let's go back to 1 year. So it's on watch. Would I short? As far as flipping to instead of like a bull bear spread or selling naked puts, would I sell or would I buy a bear put spread up in the 70? The answer is yes. They are not starting phase 2. Not this week. So whatever bull run you have, you can't take it too seriously. And the volume, see, once again, this is not, look at last time they pumped, okay? This stock, small cap biotech, is easily manipulated by the big boys, easily. Okay, look, the last time, big pop on much bigger volume, and it sucked in a lot of people on this move here, on the channel high or trend line testing, triangle high, whatever you want to call it, okay? But this was a screaming, I talk about this. I specifically talk about this declining volume the last time it was up here. And now we'll see what the volume is today, okay? 3 declining day on 3 big move. Okay, you're talking about a move from 56. It's a $10 move on a $50 stock. Okay, so you're talking 15%+ plus. It's crazy. Yes, this stock is crazy volatile. Enjoy it, but now it's not the time to be in it. It is testing ref high. Okay, so can it go to 70? Yeah, potentially short term. Yeah, that's where it was before, and that's where I will do some kind of bear spread, do like a 70, 65, or maybe 70, 55. Because this thing is volatile, big spread, okay? Or just outright buy one put, buy a 70 put, going out 2 weeks. You don't need a long time, okay? That might be a good gamble. You know, if you can get like a 70 put on a big pop up for maybe $2, you might be able to sell that put 2 weeks later for $10 higher. It is that crazy. But for now, it's a no touch for me, right? Just because it's breaking out of a triangle does not mean that it's nothing but higher. BBIO already show you that it can return back to the triangle very easily. Last one for today, CRISPR. This one, big move, okay? Big move. And the volume, decent, okay? Look, it had 5 green days in a row. And the volume, not crazy high, not crazy high, all right? So it's on watch. Is escape velocity coming up next? No doubt, holding the 20 would be important, but right now it looked like it's strong pre-market. It's early, okay? You're talking 6:20 a.m. in the morning. A lot of time, what's going on between 6 and 8 a.m. mean nothing, because most of the time economic data come out at 8:30 and then things start to go haywire. But for me, I'm not worrying about taking profit. But would I start to look at profit taking up there? The answer is yes, 50-50. Okay, so 51-ish, escape velocity to me is up there. Between 51 and 54, they're gonna be some tight range. I'm gonna stay greedy on here. I might trim a little bit, but I'm not trimming here. I'm not trimming at the 20. Okay, would I trim at 51? Perhaps a little bit. Would I trim at 53? Yes, that between 53 and 54 is a definite yes. I have a alert right here. Okay, basically it's right where the 100 MA is, because if that is broken, okay, you can look at channel high. Okay, there is a channel here, the channel, and then you get the 200 MA. So between 60 and 61 is complete exit for me. Yes, I am looking at that big of a run. Can it happen? Maybe. But for now, first trim is up there in the 51-ish. 51 to 54 is trim zone, and full exit zone is up there, right? So we'll see. We'll see what happens. I don't think there is any trial catalyst in the next week or two that will move the stock. Okay. I'm just using TA here for this one. That's it for today, folks. For sure, take profit on big up day today through Wednesday.